Good morning. My name is Dustin Dupas, and I'm the Chief Operating Officer at Tabs Group. I'd like to welcome you to another webcast where we share proprietary information on issues of interest to the CPG industry. Today's webcast is a repeat of the one we did last Friday, which presents the top-line information coming from our consumer values study that was fielded in March of 2013. Future webcasts will be scheduled for the last Friday of each month at 11 a.m. Eastern, and will go for 30 minutes. In order to maximize participation of our content, we make our webcasts open to anyone. You don't have to sign up or give your name in order to listen. On May 31st, we will present the results of our 6th annual vitamin market study, and on June 28th, Dr. Kurt Jetta will present his PhD dissertation titled, A Theory of Retailer Price Promotions Using Economic Foundations, It's All Incremental. We hope you'll have time to join us for both of these informative sessions. All followers of the Tabs Group company page on LinkedIn will receive a complete copy of all of the studies that are presented in these webcasts at no cost. The objective of the consumer value study is to understand shoppers' usage and attitudes towards value and promotion offers and how that affects their purchase behavior and their outlet choices. According to numerous industry sources, trade promotion spending accounts for the highest percentage of the industry's marketing spending, and it continues to grow its share of spending each year. Additionally, CPG companies have made major investments in shopper insight departments and research projects to get a better understanding of how shoppers make decisions. Yet despite these two macro trends, almost no research has been done on shoppers' attitudes towards receiving the discounts and improved values associated with all this trade spending. It is with that background that I'll introduce you to the founder and CEO of Tabs Group, Dr. Kurt Jetta, who is the author of the Consumer Value Study. If you have any questions, you may submit them via the chat box at the top of your screen to the ID Kurt Presenter, and they'll be addressed at the end of the presentation. Dr. Jetta, you may begin.
Thank you, Dustin, and thank you everybody for joining us today for a repeat performance of our Consumer Value Study. I'll review the top line information of the study. And as Dustin mentioned, and as you perhaps saw on the screen, all followers of Tabs Group company on LinkedIn will see a full version of the analysis. You might see that we have consumer OTC products on the screen, and if you're not in that industry, you might say, how does that apply to me? What we do see from looking at point of sale data is there's a high degree of consistency between OTCs and just about every other sector in consumer packaged goods. We will be fielding additional studies in other sectors to corroborate the results that we find in this study. But for now, we are going to infer that what we see in OTC is very similar to what we would see in virtually every other sector of the consumer packaged goods industry. So with that, let me just give you a background on the methodology. We use the TNS Omnibus panel of consumers that's 50-50 male-female, geographically, demographically dispersed. And of those 1,000 shoppers in the panel, 875 of them had self-reported purchasing behavior where they purchased at least one OTC category at least 3 times in the last year. So that is the base of shoppers that we'll be working with in this study, and we estimate that those shoppers account for about 98% of all the OTC purchases. Furthermore, when we talk about quantitative information on how much these people account for, we'll be talking in terms of purchase occasions, not dollars or units, and we'll get into a little bit more specifics on that shortly. We asked each of these respondents 3 questions. First of all, which healthcare categories have they purchased regularly, as defined by 3 times or more per year? And those would be categories such as vitamins, pain relief, cough, cold, and digestion. We then asked them a host of questions that got at their attitudes and behavior of purchasing these products on some type of consumer offer, whether it be online coupons, FSIs, EDLP, etc. And then finally, we asked them about their purchasing patterns on where they bought these these products on a regular basis. First, before we get into the actual results, it's really important to kind of reaffirm, or with some of you, confirm the statistical validity of this data, because we're going to be putting a lot of weight on the results and some of the quantitative aspects of the results. And so what we did was correlate the survey data we received with panel data that we had available to us. And so on the x-axis down here, you see each dot on this grid, on this chart, is a specific category. And so we're correlating the percent of survey respondents that say they bought the product regularly with the number of purchase occasions that we can read through the household panel through Nielsen. And as you can see, there's a very high degree of statistical fit between those two data sources. Additionally, what's not shown here is we also correlated share of outlet. So we used what we call a percent of mentions on regular purchasing by outlet, and we correlated that share with the all outlet shares that we can derive through the Nielsen scanner data, and there was also a very high degree of correlation. And in fact, when you see shares for these retailers that we'll be reporting, you can be very confident that their actual shares are plus or minus 10% in the real world. So let's get into the data and the results. So first of all, we wanted to just understand what are the most preferred means of getting value. We talk about a cash crunch consumer and a sluggish economy and a more reliance on value. Well, what does that really mean to consumers? And so we asked them if they agreed strongly with their using these tactics currently to get better value. And as you can see from this chart, there's 10 tactics we asked about, and EDLP and store brand came up as the highest. So well over half the respondents are saying they use those tactics. But the other thing that really jumps out is that all of these are getting a very high mention, so that the shopper out there is actively searching for deals on an average basis. So you can see that, in fact, we asked on I actively shop at different retailers for better deals. Almost half the respondents said that. So we have a very active consumer out there that is trying to get better offers. As a side note, and this won't be fundamental to the analysis, but check out rebate that had a very significant degree of differentiation versus all of these other tactics. And there are those of you out there that may have tried or utilized some of these free with rebate offers through mostly the major drug chains. And they get enormously high sales lifts, but it's always been our hypothesis that they're almost unreal, and there has to be something else at hand. I mean, this can't be a consumer-driven dynamic. And these results really reinforce that hypothesis that there's something else going on with the redemption on those rebates, because they're fairly common, or they have been over the past year. The increases in sales that we see from them are just enormous, yet very few reported utilization of that particular value vehicle. So let's look at these vehicles in another way. We're going to kind of regroup these tactics in two forms. First of all, we're going to call the first four you see there in red as passive deal search tactics, meaning if I get EDLP or store brand or bonus sizes or value sizes, I basically get that offer just by showing up at the store. I really don't have to do anything. I don't have to pre-plan for it, except with respect to maybe what outlets I shop at. Whereas on the bottom, we're going to call those active deal search tactics. And so that is where the shopper actually has to do something, take some deliberate activity to get that consumer offer, whether it's go to different stores or clip coupons or go online to download coupon offers. As you can see in the aggregate, the level of passive and active deal search strategies are roughly similar between the two. So shoppers employ, on average, about 2 active and 2 passive deal search tactics across all of these. And if there's no differentiation between those two, that's maybe an interesting note. But if it doesn't help us explain shopper behavior, then there's really not a whole lot of utility in using that ordering of the data. But what we're going to see is there is quite a bit of insight that we can derive from this information. And so the first thing we want to understand is, does active deal search stimulate more purchasing? And the way we'll kind of look at that is, at first on the x-axis, we're going to order the data based on shoppers that don't use any of those tactics to all the way to the right, shoppers that essentially use them all. What this bar shows is what percent of the buyers they account for, and then what percent of the purchases they account for, as in purchase occasions. And we can index those groups to the average overall. So you can see that the most active deal searchers are also the heaviest purchasers of OTCs, indexing 136 versus the average, and actually more than twice as active in buying OTCs as the lightest deal purchasers. So that's quite a gap, and it's a very consistent and significant increase in the level of purchase activity correlated. And remember, it is at this point just correlation with active deal search behavior. And you can see here's the average number of search strategies that they employ. And importantly, we see that not only are they doing active search strategies, but they're also employing passive, which is in the red. So really, these are very active deal searchers or vigorous deal searchers in general. So there's a positive correlation with really both of these variables, passive and active at this point. And in fact, if we go to the same type of analysis for passive, we see a very similar type of pattern, that the highest level of passive search strategies are also highly correlated with more deal purchasing. And in fact, you see a very similar level of gap between low and high. But again, the important thing to note is that really shoppers are utilizing all sorts of deal search strategies. You can see this highest group of passive employs, on average, 7 out of the 10 strategies. So an EDLP or an online coupon or any of those individual tactics is just one of many tactics that they employ. And that's very important to note, because there have been several national retailers that have pretty much reoriented their strategy to providing their shoppers really only one avenue to get a deal. And that is, as we can see from this data, really not going to optimize your appeal to those heavy searchers. So right now we're at the point we've established correlation and really not causation. And one of the ways to really kind of get a much more deliberate and structured cause and effect between the level of deal offered and the level of purchasing is, let's reorder the data. Now we're going to order the data from the lightest buyers of OTCs, meaning tier 1 here, that do 34% of their buyers and barely over 10% of the purchases, all the way up to the heaviest purchasers, 14% of the shoppers doing 31%, or almost a third. So as you can see, a very important shopper group right there. And let's take a look at their search activities. So at the lightest end, they're using slightly more than one active and one passive, an equal measure. And then as we go up the ladder, we can see that they're increasing their level of both passive and active search strategies. And look also at the increased level of just overall purchasing. That's a very big jump between 32 and 91. We keep going up the ladder to the tier 3 buyers now that are now above average buyers of OTC products, and we again see that very strong relationship between the increases in search strategies and purchasing. Now here's where the data breaks. We look at now a tier 4, and all of a sudden we don't receive any more explanatory power from passive deal search strategies. We don't see any increases there, but we do continue to see pretty significant increases in active deal purchasing. And so based on this data, we conclude it's really more the active deal purchasing that has higher explanatory power than the passive deal searching. So that's in the bucket of the passive are the EDLP buyers and the value size buyers and the bonus package, store brand. So it's really more the loyalty card and the circulars and the coupons that are really driving those extra purchase occasions among those heaviest buyers, those heavy deal seekers. And now when we put it in this framework and we look at just the active deal searchers, it gives us great insight into really retailer purchase patterns. So what we're looking at here is we're ordering the data in both ways. We're looking at tier 1 through 4 purchasers and active 1 through active 3 purchasers. And we're going to talk a lot about this heavy deal buyer, these active 3s. But first of all, take a look at how these metrics predict the Walmart's share of total outlet sales. And this is including everything, online, specialty outlets, etc. As you can see, as you go from the lightest shoppers all the way to the heaviest shoppers, Walmart's share of those shoppers' purchases goes down substantially with each group. And then particularly the drops really start occurring from tier 2 to 3 and tier 3 to 4. And then the drops are even more noticeable now when we order the data between active 1, 2, and 3. You can see that the lightest deal searchers at Walmart gets 27%. They're doing a great job. These are people that don't care too much about circulars, but most of them actually do care about some type of deal, an EDLP, etc. You can see there's a 33% drop in Walmart's share among the active 3. And why is that? Well, the most obvious reason is Walmart doesn't have a solution to address those active 3s. They're really reliant just on the passive deal search strategies, where the data really shows, not only on this, but in others as you get more granular into the data, they do an excellent job at really maximizing their share among people that go for EDLP and don't care too much about anything else. But what we do find is that the people that search EDLP, 2/3 of those are actually employing 2 or more active deal search strategies. So who gains share among the active 3s? And you can see 2 real buckets. CVS, for one, you can see between active 2 and active 3, their share goes up from 9.2 to 11.5. That's over a 30% gap between the active 1s and active 3s. And then the secondary outlets also benefit greatly. And the one that really kind of pops really heavily is online on those other outlets. But we also see Rite Aid benefiting quite a bit from the active 3s, and to a lesser degree Kmart. So there was some benefit to those secondary retailers by when they employ those active 3 strategies. Interestingly here, and we're going to look at this dollar store share, so you say, well, 4.8 to 7.1 to 5.8. It may not look like a lot, but that's actually a 33% jump between active 1 and active 2s for dollar share, and then they lose it in the active 3. So what's going on there? Because this really is the big growth channel that we see, a lot of store growth and actually quite a bit of organic growth as well, same-store sales growth at the dollar store. And really what we see is the core shopper of dollar stores is the under 30. And let's pay attention to the upper left-hand chart here. So the core shopper is under 30. As we look at the over 30,000 income, they essentially have to bribe shoppers to come into their store. So what we see is that of the active 1s, value stores are only getting 6% of those active 1s purchasing OTCs in their stores. Compared to the under 30,000, they're getting 23%. Now, going back to the 30,000 in income, that penetration goes from 6 all the way to 20. That's a threefold jump in the level of penetration among the 30,000 plus income, really as a function of the degree to which they employ and utilize active deal search. So the EDLP and the lower prices or whatever, just kind of value brands in the value channel is not enough to get those active ones in any degree. Now, why we start seeing the dip among the active threes, and it's not showing it on this chart, but I mean, it's not any secret that the highest income consumers are the ones least likely to shop in dollar stores. And those shoppers are actually the ones that are significantly more likely to employ active deal search strategies. So they are disproportionately active threes, the higher income. And that, I think, is counterintuitive to some people. They would expect lower income to be more vigorous on their deal search, and that's really not the case. So what can we conclude now with all of this data on consumer value in their search? Well, first of all, this is a very important shopper target. Heavy deal buyers are the heaviest buyers of consumer health and OTC and are important for shopper marketing efforts, yet we really don't hear much about these. We tend to hear about the millennials and the Hispanics and the working women and all other sorts of demographics, but really here is this group that is just 14% of the buyer base and virtually a third of the revenue. The consumer results support the theory of incrementality of promotional sales, meaning more deals, more promotions generate more sales, and that is really the topic of my webcast that will be conducted at the end of June, June 28th, at the same time, the last Friday of that month. When we look at the active versus passive deal search tactic, active does more to drive incremental sales than passive, but the data does show that passive is helpful in driving incremental purchases as well. But really, a variety of tactics are needed to maximize sales among these active threes, both passive and active. Relying on just one or getting rid of one to the exclusion of another is a negative strategy. That will harm your sales. And so it really has to be a mix of both. And it really, when we look at this active deal search behavior, it explains much about the retailer purchase profiles, and that's actually highly predictive of what happens at retailers. I mean, the most obvious one out there is JCPenney that lost 25% of their sales when they went cold turkey on, to an EDLP strategy. But there's many more examples in the market. But first off, we see that Walmart does limit their upside with their absence of deals that appeal to active threes. And in fact, that's well documented in the press right now, is their struggles to maintain positive same-store sales. And I would submit that the absence of those active three strategies is a big part of that barrier to really break through and increase their same-store sales. And we see that online, CVS, and Rite Aid, conversely, have really benefited from their ability to appeal to the active threes. And then finally, we see that value channel really must virtually bribe any person making $30,000 and over to shop there. I mean, we see this big, huge leap in penetration among that group once they, start responding to people. Finally, there's really no more efficient path to appeal to heavy users than frequent and aggressive promotional support. The key to structure the promotions is that they be profitable. So I'm not advocating just promoting helter-skelter for the sake of promoting. What I am advocating is let's find a way to make your promotions profitable, and that's really the path from a retailer and a manufacturer perspective for really kind of to just grow the business overall. So with that, I'm going to turn the presentation over to Dustin, and I'll also address any questions that you care to submit.
Thanks, Kurt. And thanks everyone for listening to the webinar today. This concludes the presentation part of the webcast, but we will stay on for anyone that has any questions. Before we get started on questions, I do want to make a few reminders. All the people that sign up as followers on our company page on LinkedIn will receive the full version of this consumer value study when it's released in mid-May. Also, if you'd like the presentation, please get the word out, hit the like button on our LinkedIn company page. And then the 6th annual market study will be broadcast on the last Friday of May at 11 a.m. Please check our website for any kind of changes that might come from that, but at this point, it's planned for the last Friday of the month. On the last Friday in June, we'll broadcast the preview of Dr. Kurt Jetta's dissertation that he'll be presenting at the Marketing Science Conference in Istanbul, Turkey on July the 10th. The title of this dissertation is A Theory in Retailer Price Promotions Using Economic Foundation. It's all incremental. To submit the question to Dr. Jetta, please see the instructions on the screen, or actually there is no instruction on the screen. If you'll just click on the chat box at the top and highlight it to him, or just chat all and ask your question there, we will answer that. So we'll open the floor to questions.
Okay, there was one question that I have here, Dustin. Who in the market does it well? So if Walmart doesn't optimize and we see there's some issues with dollar stores, who really is driving sales through promotions? And there's really 3 of them that would qualify in my mind based on what I've seen in market, as well as looking at in detail at their data. And it would be Publix, ShopRite, and Meijer. And those are all 3 the common denominators. They're hybrid retailers. So they, each one of them, and particularly Publix, has perceptions with the consumer that they can go toe-to-toe with Walmart on their perceptions for EDLP, or really any retailer. But they also have a regular and aggressive and well-structured promotional calendar. And their Publix in particular isn't, preoccupied with shaking down the retailer for just more money. We see ShopRite also has a similar strategy, although we do hear quite a bit of pain in the industry on, the way that they're insisting some of the deals get structured. So I know that's a major limiting factor for them to get even more participation in some of their promotional plans. And then Meijer is also very solid, but they don't quite drive the significant lifts that we see at the other 2 retailers. And a lot of that is because they seem to be backing off on price points a little bit overall. Let's see, I have a question here. Does your insight work shed any light on how effective Walmart's ad match policy is with influencing consumer shopping behavior? And I would suggest that there is some directional insight because what I would say is, and I think, and if you could just type and confirm that, they are really trying to accentuate their EDLP positioning, which is a passive deal search strategy. So I view it as more of a doubling down on their current strategy versus really an alteration of anything new. And in fact, in market, you do, in fact, and it's been, there was actually an article that ran in Ad Age that talked about how they tried to kind of even go more deeper on ice cream and on some of the key brands, and it didn't have the desired effect, and overall sales were down. And that's consistent with what I've seen in several other categories over the years from some of our shopper insight data. So hopefully that addresses your question on that. And then second of all, what are the core active tactics that cause dollar retailers to lose high-income shoppers at the active ingredient level? I don't know if it's that they are losing them because there's just, I think, a fundamental issue with them coming through the door in general. As we go back that one page, and that would kind of, it seems like a good question that, I might want to, because we have not finalized the full version of this, and I certainly could drill into that question a little bit more, but you can see the big drop-off on the 75,000 plus, the 9.7%. You know, so I mean, I think it's more of a fundamental issue that they're just not getting them in the door, and then because of that drop-off, you know, really a 50% drop-off in penetration. That's why you see that drop-off in the active 3 penetration, as well as the decline in that overall share. So you see the 30-plus income and the overall share among active 3. Question, do you have any grocery analysis? Oops, screen share. Pause. Sorry about that. Okay, so we do have some grocery analysis, and that had come up after our last presentation. Somebody sent me an email on that. It's interesting. Grocery actually has a pattern very similar to what we see on dollar stores, but the reasons appear to be different. So what happens is that it's not that, so meaning food share goes up and then down. In fact, let's take a little bit more look at that. So here's the food share here, 15, 17, 15.2. So it's not a huge magnitude of change, but it does seem to be material. And it's really, you see the share drop off among the heaviest buyers. And the conclusion I derive isn't so much that they're losing as they are not keeping pace. So they are actually, if you look at penetration, they are actually going up in their penetration among the tier 4s and the active 3s, just not as high as the others. And it's really, you see that online just kicking into overdrive, taking a lot of share at that higher level, generating a lot of incremental purchases. So from a food standpoint, it's more of an opportunity cost than actually money coming out of their pocket. But I mean, it's still, it is worth a little bit more drilling into because they are a pretty significant share of OTC. I was thinking it could be the lack of .com. I will follow up to see if a deeper dive is possible. Thanks. Yeah. So I mean that. Yeah. So the .com does seem to be affecting food on that. Are there any other questions? Okay, well, if there are no more questions, I'm always available for email questions after the fact. You can reach me at Kurt Jetta, all one word, KURTJETTA, at tabsgroup.com. And thanks again, everybody, for joining us. Just a reminder, if you want a full version, you can follow us on the Tabs Group company site on LinkedIn, and we'll make sure we get a full version of this analysis out to you. It should be available in a couple weeks. And we'll also be posting this to our website and to our company site on LinkedIn in a couple of weeks, so you can have the the recorded version. And our vitamin study webcast is scheduled for May 28th at 11 a.m. So thank you, everybody, and have a good weekend.